Good day, everyone. Thank you for attending today's webinar on processing pensions. My name is Sebastian Brennan, and I'm one of the consultants here at Class. As part of my role, I work closely with many practices that are using Class, sharing tips and Class functionality to help these practices become more successful. So a bit of background about myself. I'm an accountant, and I've worked in public practice prior to coming to Class. I've actually used Class for the last 7 years, and I've been at Class now for the last 3. So a bit of housekeeping before we begin. We have made the PowerPoint available for you to download within this webinar. And we will be taking questions throughout the webinar. However, we will answer these in a couple of days' time. We will send you out a summary of all the questions and all the answers from the webinar. I will pick a couple of questions to answer today during the webinar. And the webinar will be made available on our Class education page where we load all of the monthly webinars. Finally, at the conclusion of today's webinar, we would love you to take a bit of time to complete a short survey on your experience today. So before we continue with the webinar, whilst we wait for a few more people to arrive, let's get things kicked off with a poll. So the first poll that we've got here, we'd like to know what proportion of super funds that you process do you estimate are in pension phase? So we've got a couple of options for you here, and we'll give you a few moments to answer these questions. Now, whilst you're answering this, for those of you that do follow the Class benchmark report, no doubt you would note that close to 50% of the SMSFs have at least one member in pension phase. So I'll close this poll. So today's webinar is geared to accountants who are currently administering funds on Class. So it's targeted at those users with an intermediate knowledge of Class, and I'll be touching on other resources that are available to complement your knowledge around pensions at the end of today's webinar. Today's focus is predominantly on pensions, so we won't be covering T-bar in too much detail. These will be covered and have already been covered in some of our other webinars. So the outline of today's webinar is we will be going through frequently asked questions that have been raised with our support team around pensions. And these questions are numbered, so you'll be able to follow through as I take you into Class and show you how we suggest you do all of these things that have been asked as these frequently asked questions. So we've picked the most common questions, and we'll be touching on those as part of the 5 key areas of the pension life cycle in Class. So we'll start with establishments, we'll talk about pension reviews and drawdowns, and then we'll look at what you do when you want to cease a pension and remove a member. Finally, we'll be touching on the various reporting options that are available to you. All right, so let's get straight into it. Question number 1 is, do I always need to run a period update before starting a pension? Now, ordinarily, the answer to this is yes, but there are a couple of exceptions. And we've made a note of these in the column on the right-hand side under tips. So the first one is where you start a pension on 1 July. And the reason for that is because you would have already had a period update done on 30 June, or if it's a brand new fund, those components have already been confirmed as part of the opening balances. Now, the second example is the one that we're going to look at today. So we're going to be looking at a fund with 3 members, and one of our members is still working, but the advisor has suggested that we should start a second TRIS account, transition to retirement income stream. Now, a non-concessional contribution has been received on the 1st of August 2018 for Bluey, and that's for $300,000. Now, in this case, there was no balance sitting in Bluey's accumulation account before the contribution was received. And so in order to preserve the 100% tax-free status of this pension, we will not be running a period update. So let's have a look at how we do this question, as well as number 2, which is how do we set up a TRIS pension. So in class, we'll go to the members area and look for browse members. And we'll start a new pension account for Bluey Healer. Now, we'll be touching on question number 2 as well here, which is how do I set up a TRIS pension? We do get a lot of people confused because they can't find TRIS in the drop-down as a pension type. Now on class, you would always need to select account-based as the pension type, and class will know that it is a TRIS in accumulation phase based on the condition of release and the age of the member. So we're going to call this account-based pension number 2, and we're going to select the date, which is the date of the contribution, 1st of the 8th, 2018, and we'll activate this pension account. So what this has done is created the shell of the pension. And the next part will be to establish the pension account. So we'll do that as well. Now, before we continue, I'll just touch back onto our PowerPoint at question number 3, which is, can we change the pension identifier? Now, for those of you that are familiar, you would know that the pension identifier is used for T-bar. It is important because when you're reporting a T-bar record to the ATO uses the pension identifier to track the pension that the event relates to. Now, an important point here is that you can change the pension identifier when you're creating the pension in class, as long as you have not run a period update yet. And the important point to make here, though, is the time when you should be running should be changing the account identifier is when the fund was previously on a different software system and you used a different account identifier to lodge that record. So in this case, we're not going to change the identifier. We're going to use the one that class has suggested. And that will keep creating a new number in numerical order every time we create a new pension account. So the next question for this one is around, look at question 4, how do I set up a reversionary pension? So we'll finish the setup of this pension account. We'll select the condition of release attaining preservation age. We do have a warning here about running a period update, but as I mentioned earlier, because we decided to preserve the 100% tax-free status of the non-concessional contribution, we are not running a period update. So we'll select payment type full, and we'll submit that in here and ignore the warning again about the period update. So we've established the pension account. We'd now like to record a reversionary beneficiary, and we can do that in the pension details screen. So if we go into the reversionary beneficiary name, we can enter the beneficiary here and save that. Okay. Question number 6, when should I process a TRIS conversion? So this is important where you have a TRIS account that is an accumulation phase that is now going into retirement phase. The reason that you need to run a TRIS conversion is for T-bar purposes. And in class, we're going to now look at Bluey a couple of months down the track on the 1st of December 2018. He has now retired. So we're going to record this member transition. Now, an important point to make here is that there are two places to record a member transition. One is against the pension account. Now, the time that you need to do that is when you're working on a fund that is new to class. You actually, and the pension account existed before the fund was loaded onto class. In that case, you need to record any member transition against the pension account. So if you have multiple pension account, you would need to record that multiple times. Where you have a situation where a member transition occurs after the fund has been loaded to class, like in this case, a couple of months later, the easiest place to record the transition is against the member. So again, we're in the Browse Members screen, and we are going to record this member transition against the member himself. So there is a tab for member transitions, and we'll go and put the date that Bluey retired. So that was the 1st of December 2018, and we'll record that there. Now, question number six was, when should I process the TRIS conversion? You will note that there is a button that appears once you've entered the member transition, and it is a good idea. The best practice approach is to record the TRIS conversion at the time that you're recording the member transition. There is an important caveat, an important thing that you need to do before this. Firstly, you need to have processed all of the events up until the 1st of December, or the date that the member retired, and match those off in class. And secondly, you need to have run a period update. So because this is bordering on the T-bar, we won't be covering this today, but I just want to emphasize that it is a good idea to run the TRIS conversion when you have recorded the member transition. So let's move back into our presentation and move on to the next topic, which is pension reviews. So question number 7 is, what is a pension review and how do I use it? So a pension review is like a budget for a pension. It's about planning how much a member can and will take throughout the financial year in terms of pension payments. So I've made a few notes in the tips section about when you would use this pension review. So the first example is where you want to produce a minute for a member at the start of the year. Now this will produce a minute for each individual pension accounts. The second example is where you have a member that is under 60 and who is taking or who are taking pension payments, and you want class to calculate the PAYG withholding. And the third example is where you have a member that wishes to take an amount above the minimum pension for the year. And this is important because later on we're going to look at how transaction rules work for pension payments. Transaction rules ordinarily match the amount up to the minimum. But if you're using a pension review and you enter an amount that is above the minimum, the transaction rule will match the amount that you've entered. So let's jump into class and have a look at how we create a pension review. So to access this screen, we go to Members and Browse Pension Reviews. We select the financial year that we are working on. Now in this case, we're going to select and we're going to create a pension review for Bingo Healer. So if we go from the top, you'll note that this is for Bingo's specific pension account, and we can enter the payment frequency. So the idea here is that you would have a chat with your member at the start of the year and discuss how often they will be taking a payment. Ideally, you will organise a scheduled payment with them, and it might be that they decide to take a monthly payment. So initially you will start off by creating an interim review. You will have the minimum payments come up, already calculated based on the opening balance of that member account. And if the member decides to take an alternative amount, so in this case, the member has decided they wish to take $3,000 per month, and that equates to $36,000 per year. So we'll change the selected payment amount and we'll save that pension review. Now, once we've created that pension review, we can have a look at the minute that I was referring to earlier. So if we have a look at this, this has all the details of the pension review, including the minimum, the maximum if applicable, and the amount they've selected to take. Now, let's have a look at our next question, question number 8. What is the difference between an interim and a final pension review? So the interim review and the final review are there for your purposes of identifying whether you're satisfied that the accounts and the numbers have been finalised for the year. So an important point here is that if you're having the discussion with a member before the auditor has signed off on the accounts, then you should always use interim review. Later on, once the auditor has completed the accounts, you can switch this to final and save that. However, one thing that often trips people up is when you do that, the opening balance does not change. Now, if you have made some changes to the fund, or the auditor has made some changes to the fund, and the member account has now changed, it is important that you delete the pension review and create a new one to ensure you have the correct amount. So from your perspective as a practice, the interim and final review are used to track whether the... So we'll jump back into our second poll question of the day. So this time what we want to know, bear with me a quick moment, I'll bring this up. How do your clients typically take their pension payments? So the first option is pay for all the expenses personally out of the fund. They organise scheduled payments at the start of the year when required, but always use the same description, or take the minimum as a one-off payment. So you can select the ones that apply. From class's perspective, it is important to try and avoid option A with your members. If they are going to do that, then it becomes very difficult to use transaction rules to match off your pension payments. So the other three options will allow you to all use transaction rules. If you are using option 3, then it makes it, it probably means that you haven't done a pension review at the start of the year. So generally, if you're doing a pension review, you'd like to plan how often and actually set that up at the start of the year. So I'll close this poll now and I'll share. So we'll take a look at that in class. So what you would need to do for the concessional contribution is ensure that you have a fund policy that does not defer the member tax. You'll note that in here there is an option for defer member tax. If this is selected at yes, what this means is that the contribution tax is taken out at the end of the financial year. So clearly in this situation, we would want to ensure that it is taken out when we start the pension. So that the pension balance is started with a net amount. So as long as this is selected to no, then you do not need to run a period update in this example. So again, note that it is important that there is no additional balance, that the accumulation balance was 0 prior to receiving that concessional contribution. All right, let's go back and continue with the presentation. So the next topic is around pension drawdowns. So common question we get here is, what is the difference between the drawdown and drawdown proportional transaction rules? So let's take a look at class. So we'll jump back to the match transaction screen. And we will create a new rule, a rule on the fly for the payments that have got the description of pension. Now, when I select classify as, I have these two options. The first option, drawdown payment, only allows me to allocate a pension payment against one pension account. Now, if you think about how members often structure their accounts, and particularly in relation to their payments, they often have one pension payment for all of their pension accounts, potentially even multiple members who are in pension. And that's where the drawdown payment proportional method becomes useful. So here you can select multiple accounts and create a transaction rule for those accounts. So we'll go ahead and do this now. So question number 10 is, why did I get a transaction rule drawdown error? So in this case, I've got 12 monthly payments of $7,000 with a description pension. But what you'll notice at the bottom is that there is an additional payment for $10,000, which also has the same description. Now, this happens to be a additional amount that we're going to take as a commutation. But for the purpose of this transaction rule and to show you the error, I'm going to match them all off using the transaction rule. So what happens is that the last payment will not be matched off. So the warning you have here is that some transactions have not automatically been allocated as they exceed the minimum drawdown amount specified. Now, the important note here is that this is not saying that it has exceeded the minimum. Because we have entered a pension review, it is selecting the amount that we have specified. Now, the additional $10,000 though exceeds that amount, and therefore it is asking us to manually allocate this payment. And that's what we're going to do. So question number 11, how do we process a partial pension commutation? Now, an important tip here before we continue, the period update is only mandatory for full commutations. So in this case, we are not going to do a pension commutation. We are not going to do a period update, apologies. So let's go and do that partial commutation. So if we go match to new, and under member payments, we select pension commutation. We are going to select Bluey as the member, account-based pension number 1. We've already got the transfer date, which is based on the payment date. We will select cash lump sum as the payment type and member voluntary as the reason for commutation. We will leave this as partial. And in the next screen, we have the ability to enter our amount. And what you will notice is that it will pre-fill the components for us, both the tax and preservation components. So we'll go ahead and submit this. Again, the warning about the period update, it does not stop you from running this. So as I said, it is optional for a partial commutation. It is a good idea to have a look at whether the pension payments have been paid to date. If they haven't, you can still pay them up until the end of the financial year. But in this case, we have already paid those pension payments. So let's go to the next topic, which is ceasing a pension. So question number 12, how can I fully exhaust a pension balance? Now, in this case, because we're fully exhausting a pension balance, a period update will be required the day before. So in this situation, casting our mind back to the fund, we are now going to look at the third member, Chris. Now, Chris is going to be leaving the fund on the 15th of March. And so we need to run a period update on the day before, so the 14th. So if we go into our period update screen, we'll process that for the 14th of March 2019. Chris leaves SMSF. Process that. And once we've done the period update, we can then go and commute the balance from his pension account. So we'll go to member commutations, select Chris. He's only got one pension account. If we put the date, 15th of March 19, notice the period update warning disappears. We're going to select here payment to accumulation. Excuse me. Now, importantly, this time we will select full as the payment amount, and we'll go ahead and submit that. Now, in this case, I'm not going to run the rollover. So we're just going to leave that amount in accumulation, but the next step would be to process that rollover. Okay, how can I delete a pension account? So in this case, Chris has now transferred the amount from pension to accumulation. So that pension account has a zero balance. If we go back to the Browse Members screen. So a common question is, how do we get rid of this pension account? Can we delete it? The answer is no. So for those of you that are familiar with investments on class, you would know that you cannot delete an investment such as a share if it has transactions allocated to it. What you can do though is suspend it, and the same applies to pension accounts. So we can go ahead and click on the pension account, edit that pension account, and suspend the pension account. And if for whatever reason we need to reactivate that, we can click on activate, and then that pension account will reappear. Okay, question number 14, can I remove a member with a zero balance? So for those of you that read the release notes earlier on in the week, you'll be pleased to note that we have made a change to this. So if we look at our Browse Members, previously a member with a zero balance would always show in this screen. Now, what we have done is when you enter a leave fund date, so if we click on Chris, we go to member details and we put the leave fund date, 15th of March 19, what happens now is that it will actually no longer show the member. So here we go, we only have our two members showing. If we ever need to show that member again, we just show previous member, we can edit and we could remove the leave fund date. Now note, there is still an amount in accumulation. So what you should be doing as a best practice is processing that rollover before you enter the leave fund date. As I mentioned, I'm not going to be processing this rollover today. Okay, the final topic today is around reporting options. So, question number 15 is, can I print a report with all the minimums and the maximum for a member? The answer is yes, you can. So the report that you would need to run is a pension limit report. Now, if you're wondering what I'm clicking on here, this is a shortcut to the reports, the single reports. and I can go and locate my pension limit report. And I can preview that for the 19 financial year. Now, what this report gives us is a summary of all of the pension accounts by row, including how much has been drawn down, what is required for the minimum, as well as what has been allocated for the current financial year. Question number 16, do you have merge fields for pension details? So unfortunately, we do not have any merge fields relating to members, and that includes pensions, minimums, maximums. We do have a number of merge fields that are available for fund details, as well as details about the accountant, the auditor, the trustees, and those are useful to create custom reports. But unfortunately, when it comes to merge fields specific to pension details, you will need to use the reports and the minutes that are already generated in class. Alternatively, you will need to create these outside of class. Okay, question number 17 is, where do I track pension payments taken for a member? Now, the best place to do that is at the business console under members. If you go to the pension limits radio box and you select the financial year that you're looking at, you will get a list of all the pension payments taken to date for all of your members. And this is a really powerful way of tracking when you get to the end of the year in May and June, and you want to make sure that people have met their minimums and staying under their maximums. The color coding will suggest the ones that you need to look at. So in this case, the amount 48,000 for Bluey is below the minimum, so it would help you identify that pretty quickly and rectify that. So this is a really important way of tracking all the pension payments as well as contribution caps, rather than doing it on a separate system, say Excel or another list you might have outside of class. Clearly though, it is important that you are processing the transactions in order for the information here to be relevant. Okay, so that was the last of our questions. I'll just touch on the resources that we have available now for further help. So I mentioned that we have our training module specifically on pensions. For those of you that are unsure how to access that, under the question mark, you can go to class education. And in here, you can go to training courses. So this is the members pension and asset segregation course. I recommend that you go through that if you found that some of the stuff we were covering today was a bit too quick and you found it a little bit hard to follow. You may want to refresh your understanding of pensions in this course. We will also make this particular webinar and the recording available here under the webinars tab. So this is a new tab that we've entered, that we've put on the particular class education screen. And here you have a copy of all the webinars that we have run in the recent past. So feel free to go back through some of those. Now, as well as the user guide, which has answers to specific questions that you might have, we do also have the guided walkthroughs. Now, for those of you that haven't used a guided walkthrough, you can access it under the question mark icon. And if you click on processing, some of the more common questions that people get stuck on are answered through the guided walkthrough. So you can see in relation to pension, there's one on creating a pension, setting up a pension review, and commuting a pension. Now, the way that this works, if you click on the particular guided walkthrough, it will come up with a number of tabs, information boxes, giving you an understanding of what you need to do first. And then it will take you through the steps of how you actually do that. So it tells you things like ensure you've set a condition of release, run a period update if necessary, and then you can actually follow the walk as it takes you through the various steps to, for in this case, set up a pension account. So that's a worthwhile resource to have a look at if you haven't already. So that's the end of today's webinar. I'll answer one more question before we wrap up, and that's one that's just come through around the reports. So the question is, are we able to run these reports that you've mentioned as part of a report package? So the answer is yes for the pension limit report. So that is the one that we were looking at earlier in the runner report screen. However, for the pension reviews, we are not able to run those as part of a report pack. You would need to run those off individually. So in short, anything that you can see in this screen under the runner reports, including any additional custom reports that you've created, you would be able to run, but anything else would need to be generated against the particular event. So pension reviews, pension establishment minutes, pension commutations, all of these would need to be run when you've actually generated the event. So look, thank you very much for your time today. We'll give you a couple more moments to ask any questions in the chat box. As I mentioned, we will send you a full summary of all the questions and the answers in the coming few days. And we'd really appreciate if you could take a few moments of your time to complete the survey at the conclusion of this webinar. Thank you all very much.